Have you ever wondered if somebody else looked at your financial statements, what they would think? Is it good? I mean, small business owners, we don't make this information public to everybody. So, what would a financial professional say about your business? Well, today we're going to walk through real financials. We're going to walk through financials of a bakery. This is a bakery. They specialize in cupcakes. They do a little bit here, a little bit there. And so we are going to look at their numbers and we're going to dissect them. And this is kind of a fresh look. So I've looked at it a little bit just to kind of do some formatting, but I haven't done a deep dive. So we're going to try to get my raw reactions to their financials. We're going to look at 2021, the year to date so far. We might look at a little bit of historical stuff too, but I'm just going to give feedback, give some questions. This is totally meant to just be exploratory and kind of get the wheels turning on maybe what could be helpful. See what you can glean from this information that might be helpful for your business as well. Now, might not be helpful at all, but what we try to do is we try to look at financial statements and see, can we improve this business? Is there something in the numbers that indicates that there might be a problem, or maybe something we could do differently, or maybe something we can improve, or maybe some decisions or some strings we need to pull in order to get the results we really want? All right, so if this kind of information is helpful, I would love to know. Please like this video and put a comment in the comment section below if you found this helpful. I have plans to do more of these types of walkthroughs, so I would love, love, love to hear your feedback on this video. Well, let's go ahead and just dive into the actual financials of this bakery. Okay, here we are in some real financial statements. We're going to start with the profit and loss, and this business is a bakery. They kind of focus mostly on things like cupcakes and desserts, and from what I understand about their operations, I don't know everything, but they do offer, a retail space where people can physically walk in and order, and they also do some catering and some wholesale as well. And they're also participating, as we'll see, in some of the direct-to-consumer delivery services like DoorDash and Uber Eats and things like that. So we've got this business. I think it's pretty complex, actually, from a financial, when we look at the financials, but really, at the end of the day, a fairly simple business model. Selling goods and making money from selling those goods. They are making the goods themselves. They're not purchasing them from somewhere else. So when they're doing that, they obviously have costs of supplies and things like that. And then obviously a physical space that needs to be maintained on top of some other things. So we're going to get into this and we'll actually see these things come to fruition when we're looking at the financials. Okay, so just really high level first, what we'll see is we have income up here, lots of income line items. So I definitely want to talk about that. And then, like we discussed, there's cost of goods sold. This is the products. These cost of goods sold should tie to the actual, what does it take to put into actually making the goods. Basically, you wouldn't have cost of goods sold if you weren't selling an item. And then we get into just regular general and administrative expenses along with payroll and everything else that's not directly related with the production of the goods. That's just kind of high level how the P&L is laid out. Just to take you through real quick, we do have the 2020 P&L in this document as well as the July 2021 balance sheet. And we'll definitely talk about the balance sheet and the P&L at the same time. One thing you'll note is that I have January through July numbers here. And so I have a balance sheet that also lines up with the end of July. So we can get kind of an apples to apples comparisons. When I pull profit and loss statements and balance sheets, I want to make sure that they're in comparative periods. So if my P&L is ending July 31st, I want to make sure that my balance sheet is also ending July 31st so we can make sure that they're making sense between each other. Okay, so just kind of really high level, the first thing I notice here is that, they're selling a lot of goods. I didn't really have any idea of their volume, but looking at this, they're almost at $750,000 and only 7 months into the year. So my assumption is that they will be well over $1 million this year in sales. And overall, it seems like they are really producing a high level of volume. So that was kind of the first thing that caught my eye. I was also noticing a little bit, probably a little bit of seasonality that's happening here. We got quite an increase in sales. It started to really ramp up in May, June, and July. So, This could be for lots of different reasons. We've had, loosening COVID restrictions. We've had, if bakeries, you could be doing more things like, more events, more things where people are coming in and needing goods to bring to parties and things like that. I'm not exactly sure what's 100% driving this, but I'd be curious if it's a normal thing for the summer in this business to be busier. We don't even really have a very good comparison when we look at 2020 because 2020 was a crazy year. We do see a bump in sales last year throughout June, July, and August, which was a good bit higher than the rest of the year. However, between 2020 and 2021, it's really hard to say exactly what will be a continuing trend going forward. That was just something I noticed. And when I'm talking with any business owner, I love to know whether or not there's seasonality in the work that they're doing. The next thing that I noticed with the financial statements is that they have a lot of sales line items. And that actually was kind of confusing to me when I first looked at it because I was thinking, well, they only sell goods of like cupcakes and, other bakery items. So I don't understand why they have so many line items for sales. And then I realized the way that they're breaking down these sales is that it's more by sales channel or where the money is coming from rather than what the product is. And this is actually not how I love to see financial statements presented because you could be taking money from lots of different places, but essentially you're selling the same good. For example, online versus online marketing, I don't understand what this is versus this is. And then how is that different than retail? How is online different from retail fundamentally? Because when we're looking at financial statements, what we want to see is we want to see information coming out that's helpful for us to make decisions. So I don't really care where the money came in quite as much or how somebody paid me as much as I care about maybe the profitability of a line or an activity that I'm doing. So if I'm having, let's say, 2 physical locations, I don't care if one location is making money from lots of different sources. I just want to know that overall that location is overall profitable. So in this situation, I would probably recommend this business changing the way that they are recording their sales and try to do it more by what are they selling. So if it's retail sales by like the walk-in store, that's fine, but have that just be bakery sales. You could rename this, and my assumption is that this would include retail. It probably would include online marketing and online. And now I don't know what this online marketing thing is unless they are getting paid by somebody else to do online marketing, which is not their core business. Then I would put it into other income. And I'm not exactly sure. Maybe online is people buying stuff online and then picking up in store would be the same as just regular old cupcake sales. I would recommend them doing that separately. So probably we would say cupcake sales would be one item, potentially events and weddings. Like this would be a different thing because I bet they have to put a lot of additional work and effort into a wedding or a special event. They might have to buy special supplies and things like that. So it would be good to track that income separately and also budget for it separately because there's probably more and higher costs associated with weddings, but you can also charge a higher price tag. So you don't necessarily want that blended in with the rest of your cupcake sales. And then wholesale is probably another thing that would be good to track separately. Really, all these other things combined, I'm not sure they need to be separated out. There's not much difference between the money coming in from Uber Eats versus DoorDash. Fundamentally, they are the same type of thing being sold. So I would recommend maybe rethinking the sales income structure. A question that I would have if I was talking to the business owner directly about some of this stuff is I would be looking at some of these months over other months and trying to determine why there were higher sales in certain items. So for example, we understand like weddings and events probably much higher than the rest of the year because of more outdoor activities that happen. And then also just with the lifting of COVID restrictions, we all know that wedding season is really during the summertime. So it makes sense that those would be higher. I would also be curious, why do we think that January is such a slow month versus May? What is it that's happening in January? Is it just cold and people don't want to go out? Or is there something fundamentally different about the way that the shop operates? And that's just kind of a question that I would have to the business owner to try to understand that better. My question would kind of be, why would we see that much of an increase from the winter to the summertime? So And that, again, could be something COVID related or something, but these are just the types of questions that we would be asking. We would want to just understand our numbers better. Another thing that I wanted to mention was that this other income section actually needs to be classified differently in the accounting system. So, other income should actually be a separate classification that would go towards the end of your P&L. This net ordinary income here would be from normal operations, and then there would be another section after this net ordinary income where it would say other income. These are things that happen from not normal operations. So something like PPP loan forgiveness, for example, is something that is in other income, and it's not standard. It's not part of your normal operating income. So you don't want to be looking at that and really having that drive your decisions, because if you might be like, wow, okay, we made $850,000, $856,000 in 7 months. That's amazing. But the truth is that's not actually what the business made. The business actually made $747,000. And we don't want to be making decisions on the wrong number. So even these percentages of income that have been calculated, they're actually skewing a little bit, because we really should be basing it off of sales income and not this other income that's not normal for us. So that's just kind of a little bit of a something to consider. Like, don't base a lot of your decisions on anything that's not normal for your business. So definitely PPP forgiveness and other types of grants and stuff probably shouldn't be considered when you're trying to make decisions on what to do next. So then we get into cost of goods sold. And one of my favorite things to do when I'm looking at financial statements and helping people design financial statements and design their financials for making decisions is to make sure that we have cost of goods sold that line up with our sales items. So if we did redo up here, we would have something like, retail income or bakery income. And then I would have an item down here that would be like food supplies or food costs. So they have food costs right here, which would line up with that. But then also probably we would have maybe some subcategories on bakery cogs. And so underneath that might be bakery supplies and food costs and packaging and purchasing, additional stuff that would all go along with retail sales. So we could kind of do sort of a separate P&L, like a mini P&L for each line item. So maybe if we have additional costs for weddings, we would put that under like a weddings COGS. Now, something like food costs is hard because you can't necessarily separate it out. You might be buying tons and tons of flour, and you're going to be using that for your wholesale goods. You're going to be using it for your retail, and you're going to be using it for weddings. So that might be, just to simplify that, maybe just all around food costs would be okay. Anything that's like really specifically related to a certain item, you would want to break out into a cost of goods sold. So this is a really good example. The third-party delivery charges. We know these charges, that helps us figure out, okay, well, between DoorDash and Uber Eats, maybe this is an argument to keep DoorDash and Uber Eats. I would combine them, but keep them as a separate sales line item, is that you could add these two together and then minus out the delivery charges and then get an idea of what your, gross profit is before even food costs. I imagine taking on things like DoorDash and Uber Eats, that might not be the most profitable endeavor, but it might also be something that is sort of helping the brand awareness of the business. So maybe if they're kind of, maybe breaking even on Uber Eats and DoorDash, it might still make sense because then somebody now knows about their bakery. So that's something to consider. Overall, I think, we want to redo this calculation based off of what we think the actual 27%. So 27% for a product-based business is not bad. Food costs are, this is really only including food costs. This isn't even including like merchant service fees, which are down here. If we are charging merchant service fees, again, we're doing this on the right number here. That's another 2%. I actually typically put merchant service fees because this is like when somebody walks in and uses a credit card, you wouldn't be charged that if you were not taking a credit card. So I usually put these up in cost of goods sold because essentially you wouldn't have them if you weren't selling something. So that's what I use to classify what's a cost of goods sold and what's not. So really between, 2% in credit card fees plus, 27.4% in other supplies and COGS, you're almost at a 30% COGS percentage. that's still pretty good. What we would like to see is just figure out, are there some ways to get these numbers down? A lot of things that you use in a bakery are very perishable. So I would definitely want to talk to the business owner and make sure that we understood, like, what are we doing to prevent waste? How are we purchasing things? Can we, speed up that timeline so we don't have stuff sitting on the shelves and getting lost or getting spoiled? That would just be one of the things that if we were going to try to get anything down, this would be, the obvious choice. And then also really having the discussion about how, does it make sense to be doing a third party delivery? I'm sure an analysis should be done between DoorDash, Uber Eats, and then with all their charges and what they cost, does it make sense? And we could do that based on a projected profitability. And it would be a separate analysis, but it would certainly be something worthwhile for them to do. This kind of struck me because I didn't know about this when I was chatting with the business owner. This is a royalty fee, and I'm not exactly sure, but a royalty fee would typically mean that they are paying somebody else to use something or the privilege of using it. So I'm not sure exactly what that might be, but that is interesting. So I just wanted to point that out. And then computer and software apps, I am surprised there's not more stuff here. I actually think that maybe like the computer charges and software and things like that might be down here in dues and subscriptions again. This is one of those common like QuickBooks naming conventions that is commonly kind of confusing. Dues and subscriptions can mean anything you want it to mean. Sometimes people see that and they say, oh, subscriptions, and they automatically put software in here. Then they don't put anything into a software account. So, that's just a kind of a classification thing. Where do you want your software? I actually was very surprised at how high this dues and subscription numbers were. And that made me think this has to be software. And I could be wrong, but that would just be my initial thought because this is really missing up here. Okay, so their labor here, overall labor percentage is, remember, we're not using this number that's already calculated. We're going to use it based off of the number that we really believe is regular income, is 38%. So you guys think about the fact that now we have 38% plus 27, here you're at 67% with labor and cost of goods sold. So that's not leaving us that much more profit to operate the business. 30% is not bad, especially for an area that has fairly high minimum wage requirements. It's not super high, but I do want to just point it out that obviously labor is going to be a huge place that they cannot, get that wrong. So, being very careful on scheduling, being careful on planning for labor rate increases is going to be really important for this business. One thing I really want to point out here is that there are owner wages, which is good. They should be paying their owner. I would be questioning whether or not this is high enough because it is a S Corp. LLC taxed as an S Corp, so you need to pay your owners a reasonable wage. So I'm happy to see that on there, but I would question whether or not it is high enough. Now, if they're going to be kind of a break-even year, then, it makes sense to not, pay the owner too much. The other thing I really wanted to point out to this business owner is I think they are way overpaying for payroll processing fees. Now, I think this might be a misclassification in June because this is almost $6,000 and nobody should be paying that much for processing their fees. But even if we take the average over here, I'm not sure how many employees they have, but this is average of $277 per month. My assumption is that you could probably get that down a little bit lower. And there's an inconsistency. It's 500, 200, 180 to 363. So I'm not really sure what processing they're using. I would consider something like Gusto, where you would have a flat monthly fee based on the number of employees you have every single month. That would be something to consider for this business to just get more of a predictable fee as well as a lower cost overall. I would think it would be lower. And then we really get into just some other random expenses. I mean, traveling and parking, I'm not sure if this is, I don't know why they would be traveling. Lots of business owners travel for different reasons. This might be traveling to a wedding or something like that. And if it is, I would put probably traveling for a wedding should be more of a direct cost of goods sold so that we could also, you're probably charging that customer or client for a wedding. So that's something to think about. Here we get into advertising and promotion. So I'm not sure why you have to pay for DoorDash and Uber Eats. I actually don't work with very many companies that are doing this, but you might be kind of pushing and promoting, or maybe like be a sponsored or kind of a highlighted business. So maybe you come up to the top of the algorithm, or you come up to the top and you're suggested more. That's kind of what I would expect. So maybe they've realized, by investing more money in here, we get more orders. Now, remember, if we're going to see if this is profitable overall, you really need to do an analysis to determine, does it make even sense to offer these services on DoorDash and Uber Eats if it's not profitable at the end of the day? So that's something to think about. And then Yelp ads, for food stuff. I mean, Yelp is pretty important. I would imagine that you need to have some sort of presence on Yelp. I'm not sure if ads make sense. So that'd be an interesting thing to kind of dig into. And I'm not sure what miscellaneous is either, but that would be a question I would have for the business owner. Gift card production actually shouldn't be in advertising and promotion. It could be in just like a printing expense, or even potentially a cost of goods sold. So that's something to think about. Employment ads too, we typically wouldn't put in advertising and promotion, because you would want to look at all of your cost of advertising together in order to see how it impacts sales. And, advertising for employees is not a number you'd want to include in that. So I would move that out into an employer information. And then barter fees, this is probably through some kind of bartering system. And then Facebook ads. So Facebook ads can really go really, really high. So always make sure you understand the data coming back from Facebook ads and to see whether or not it's worth it. Because, at the end of the day, that's $3,200 that may or may not have actually done anything for you. It's really, you need to know that your Facebook ads are actually moving the needle for your business. Okay, so we have a car payment here. I'm not entirely sure why this would be an expense. I would typically see a balance on the balance sheet if somebody is owing money on a car. We do have a vehicle here, but instead, when that is paid, the interest portion should be going onto the P&L, but the actual, payment, if you're paying $464, probably a portion of that is interest, maybe $100, and then the remaining amount would be decreasing the balance sheet. So I would definitely wonder, if that's been set up correctly. And then I'm not sure what auto other is, but probably just maintenance and then fuel costs. I bet they do local deliveries, and they probably have a van or a truck that they ride around to events and things like that. So it would make sense that they would have a vehicle, but I would just be curious if this is, really being treated the correct way from an accounting perspective. Okay, so they are getting some bank service charges. It's not bad. I would want them to try to find a free checking account or talk to their bank and see how they can eliminate these fees. Sometimes just by having a minimum amount in your checking, you can avoid fees. So that would be my recommendation there. This cash over short ultimately is not that much. I'm not too worried about it, but this can be a major problem for some businesses. So if you're having big fluctuations in your cash over short, you probably need to talk to a bookkeeper and see what's going on. Okay, remember dues and subscriptions. We think this is software. Now, interest expense, this is interesting because I don't know why this number is negative. It should not be negative. So my thinking is maybe there's an accounting error happening there. Unless they are taking money in and somebody else is paying them interest, that would be the only thing that would make sense. But then it should be interest income should be separated out and interest expense should be in a different line item. So I'm really not sure exactly what's happening here. It might be that this car payment is including like part of an interest expense, and it's just an accounting error that needs to be fixed. Their meals and entertainment, they must be doing some kind of like team meals or something, would be my guess. Or maybe I don't know. This is a little bit high, I would say, unless you're doing kind of regular meals with your team, or you're bringing in lunch, or maybe you're doing regular management meetings or things like that. If they needed to buckle down and really save money, I bet this is a place that they could do that. Let's see here. And I would also say the same up here in dues and subscriptions. My guess is there's probably some subscriptions up here, especially software, that could be potentially consolidated or canceled if they're not using them. Really, they don't spend a whole lot on professional fees. Their accountant is very inexpensive. I think they do all their bookkeeping themselves. So every now and then graphic design makes sense. And then they were incurring more, I think, legal fees because they were working on a project. So they informed me about that, which makes sense. Rent and triple net. This is a little erratic, which I was a little bit surprised to see. It looks like maybe there was a prepayment of rent. Maybe when a PPP loan was gotten, they might have prepaid rent for a couple months, which would make sense. That's kind of looks like that's what happened here. When it gets into repairs and maintenance, I mean, things like pest control and grease trap cleaning, of course, are going to need to happen. We need to make sure that our place is healthy and safe. And then equipment repair, this is always going to be something part of whenever you have a bakery, you're going to have your supplies taken care of. So all of this really makes sense to me. The big thing that doesn't, though, is this store renovation. So they are renovating their space. But what I would typically see is that these are actually capitalized on the balance sheet as a asset and then amortized or depreciated, essentially meaning the same thing from an accounting perspective over time. My thinking is that these would technically not be an expense. Yes, they affected cash flow because you had to pay out money for them, but technically they should be moved to the balance sheet, and then you would take a portion of that over the length of, however long you believe you'll be there, or the useful life of the renovations, and then depreciate them or amortize them over time. I would definitely talk to the CPA about this one and see how best to treat that. Now, small equipment purchases, most businesses like this would have like a threshold of a dollar amount to say amounts over X amount of dollars will be put on the balance sheet as an asset and depreciated over time. Or if they're under a certain amount, we just expense them because, I imagine they have stuff all the time that they have to replace, baking pans, muffin tins, cupcake tins, paddles for their mixers, things like that. I bet that always is breaking and things need to be replaced or something gets ruined. So I would imagine that this will always be an ongoing expense. Business and occupation taxes, yes, those are expensed out on the P&L. And then uniform purchases are totally understandable. Charitable contributions, nothing really out of the ordinary here. One thing I wanted to point out about insurance, so they have, auto insurance for the business vehicle would make sense. However, life insurance, I would have to ask if this is just for the business owners, they actually cannot deduct this as part of a business. Yeah, even if the business is paying for it, it needs to be for employees to be able to be a proper tax deduction. So I would talk to the CPA, just to, check that policy and make sure that it qualifies to be a business deduction. And then things like linen service, I really would wonder if this is normal for the restaurant or for the retail, or if this is for special events. Because if they're only renting linens for special events, then this should be a cost of goods sold. And I would move that up into the cost of goods sold line item to, get a better idea of whether or not those events are profitable. Telephone, the expense is kind of high, so I'm not sure if maybe there's a cell phone lease, included in this, but this would probably mean multiple lines. That does look high to me, so I would just, want to check that and make sure that those bills, maybe shop around and see if there's a better way to get a lower amount on your telephone bill. Gas and electric is not super crazy. And then internet is also kind of in line. You might be able to get a slightly different rate on that, but kind of in line there too. So overall, we're looking at the total net income for this business to be $160,000 for the year, which at first I was thinking, yay, that's amazing. However, we need to remember that $108,000 of that really came from COVID grants and whatnot. So $50,000, 51,000 over 747, it's only a 7% profit margin. Now, congratulations on being profitable. That's amazing in a year where, food service has taken a huge hit. That's nothing to be, sad about whatsoever, but we would like to see profitability closer to 10 to 15% on a normal basis. So, my question to this business owner would be when is the last time they considered a pricing increase? Maybe that's already happened. I would also want to say, are some of these items that we talked about, are they profitable? Do we want to offer DoorDash and Uber Eats? Or is that actually a very profitable venture and we need to put more effort into it? Really, those would be the questions we would be having of, how do we move the needle forward and how do we increase profitability overall? And some of it's just going to be dissecting some of these numbers. So then we would get into just kind of looking over the balance sheet. So, I mean, the great thing is that this business has a lot of cash and then not a lot of liabilities. So, I would say, they've got a nice buffer in their main checking account. Their regular operating expenses, just for, keeping the doors open, is about 55,000 per month. And then adding in food costs of another 26. So, somewhere around $70,000 just bare minimum to operate. And so right now they have, I'm just doing rough math here for you guys, but they have, 4 to 5 months of operating expenses. Now, some of this is EIDL and PPP money that has been borrowed. So they do have, obviously still some liabilities on their accounts. But, the good news is that they actually have cash. They probably don't need to go and try to seek any more additional funding. Now it's just a matter of figuring out how to get their business operating in a very continually profitable space. Just a couple things. I would question this barter account. I don't know why it would be in a negative unless they've, essentially received a lot more bartering than they have given, which is totally a possibility. $800 in petty cash is pretty high. This usually doesn't get adjusted, so I would question whether or not this is actual amounts. And then employee loans, we typically don't recommend people doing employee advances, but if you need to, just make sure that the employee is aware of what their balance is at any point in time so that you do get that paid back. I would also just question, whether or not those tenant improvements should be a fixed asset on here and be in this accumulated depreciation number over time. So that's definitely a question to ask the CPA of this business. Additionally, I love people using credit cards for their business. I think it's a great idea. What we don't want to do is we don't want to incur interest on these credit cards. There's no reason that this business should not have these on automatic payments and making sure that they're not incurring any kind of expenses there. I would also want to make sure that they're using the credit card to buy their supplies because, they're putting, 14, 15, 16, 20, 21,000 of supplies on a regular basis. I would actually think I would want to see their credit card actually a little bit higher so that they could put more supplies, use their credit card more heavily if they've got the credit line for it, earn points because that's always a good thing. And it buys you a little bit more flexibility in your cash flow, always with the intention of paying it off every time so you don't incur those interest expenses. But I think there's some leverage here where they could use the credit card a little more heavily. There's this bank loan here, which now that they have this EIDL, they can totally pay off the EIDL. Now that EIDL rules have changed and you can pay off other business debt with them, use the EIDL to just knock this one out. They have a tenant improvement loan with their landlord, and there's an arrangement there, but that's not anything we need to get into. All right, and I would just say that this business is once they feel like they have, come to the end of their covered period, they can go ahead and apply for PPP forgiveness and start getting prepared for paying back the EIDL loan as well. Well, that's kind of just super high level, you guys. I mean, this is, again, initial thoughts of how this business is doing, some recommendations just from a CFO perspective. I know this is, maybe a little bit fast for some people going through it, but I wanted to make sure that we kind of covered some of the detail, but also, knowing that there's a lot of questions when we look at financial statements, and sometimes it can take some time to really dig in. Well, thank you so much, everybody, and I hope this is helpful. Please leave questions in the comment section below, and I would love to hear if this has been helpful for you. Thank you so much. All right, well, that might have felt overwhelming. Not everybody loves to jump into financial statements, but I loved it. I thought that was super interesting, super fun, and hopefully this business owner is going to be able to make some tweaks to improve their overall profitability and performance and also their reporting so that they can make better decisions going forward in their business. All right, remember you guys, the numbers in your business are just the outcomes of the activities that you have done. So when you are operating your business, you are doing things and making decisions that ultimately will have a financial impact. And the financial statements are showing that financial impact. So you can totally change actions to make the numbers look better. So, all right. Well, again, please give me your feedback. I would love to know how you thought this went and if you'd like to see more financial reviews. All right. Bye, everyone.